Good afternoon, ladies and gentlemen, and welcome to the SLEEP PLC Final Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet company dashboard, and we will notify you via email when these are ready for you to review. I would like to remind you that the presentation is being recorded. Before we would begin, I would like to submit the following poll. I would now like to hand you over to Cheryl Cavalier, CEO, and Tim Parfitt, CFO. Good afternoon to you both.
Afternoon, Lloyd, and afternoon to everyone dialing in. We've got around 20 slides, I think, that we'd love to share with you, which sort of bring some colour to our RNS that released this morning with our 2020 annual results. The main purpose of this is more just to give you a chance to hear from myself and from Tim a little more of the business. I'm aware I've been in seat as CEO for just under a year now. And we haven't had a chance to speak directly to investors for various reasons, COVID related and otherwise. So it's no more, no less than an opportunity for us to speak to you and for you to ask questions that may be on your mind, have a bit of open dialogue. So with no further ado, what we're going to talk to you about today is broadly our vision and mission. A bit of a reminder of what we're trying to do as a business. Some headlines on the business performance in 2020. I mean, nothing more than you've seen this morning, but a bit of colour. Where we are now as a business and where we're going next strategically, where we see the future growth coming, and then just a little bit on the current trading and outlook. So just, as a reminder, and I've talked in various forums on our mission as a sleep wellness business. I'm aware that not always is that clear what that actually means. What that means is, we focus on sleep and the impact that sleep has on people's everyday lives in the broadest possible sense. We have a very powerful belief that being well slept makes people healthier and happier and makes everything a better place. And we're here to help people get the sleep they need to rise and shine. What that means in terms of the sort of products and services we develop is that we develop at sort of three levels. So we develop fundamentally beds and bedding that make sure you are physically comfortable to sleep well each night. And you can see our range at the moment across mattresses and bed frames, duvets, linens, pillows, a whole raft of stuff to make sure that your bed is as comfortable as it can be. We then develop bedroom products, which are wider environmental products to tackle some of the problems that interfere with sleep in the wider bedroom, whether that's light, temperature, noise, scent, and various other aspects that interfere with good sleep, which are beyond the bed. And then going forward, we're looking more and more at how we can help with what we describe as a sleep wellness routine. So the routines that help you wind down for sleep and make sure you sleep well overnight. That could be anything from content that helps you with mindfulness. We have some meditation content. We've got advertising that helps you switch off on a Sunday night before the horrible Monday lands, and products that help you wind down for bed. Whether it's products we've currently got on our website, such as we have a sleep aid called the Morphe, and products we're investigating for the future and relationships that we may build. So to touch on the 2020 performance, I'll hand to Tim to talk you through some headline financials.
So as we can see there, and as we announced this morning, we reported a 6% growth in our revenues for last year. It was a very mixed year. So started off quite well, and then we went into pandemic. And as we've talked about previously in our announcements, the sort of going into Q2 was a bit softer. Particularly UK consumers were nervous about spending. And it took about a couple of months before that corrected itself. And then from late May onwards, right through towards the final quarter of the year, consumer spending was very, very good. And our growth was good, particularly from UK consumers. We all know why the high street was closed and people working from home and people were spending more online, that sort of thing. And then we've also previously talked about Q4, particularly right towards the end of the year, being a little bit softer. There were some supply challenges that we faced along with all other mattress manufacturers. So there was shortage of foam, shortage of spring components, and that softened demand a little bit towards the back end of the year. But also that 6% growth in revenues should also be looked at in the light of the improvement in our marketing efficiency. So we pretty much halved the amount that we were spending on marketing across the whole group, so for UK and France. And that meant we've slight growth in revenues, but also halving marketing. So much more efficient marketing spend. Culminated in a just over 80% reduction in our Ebitda losses. So in very broad terms, we reduced our losses in 2019 were about 10 million, and we got down to about 2 million last year. And this was our first year that we were cash flow neutral. So we started the year with 8 million in the bank. We ended the year with 8.4. There's a little bit of a boost there that we got from the government COVID support measures, so we were able to defer some of our VAT from the beginning of first quarter of 2020, and that will be paid at the end of this quarter. So that gave us that sort of bump up from 8 to 8.4, but otherwise completely flat cash on the year. And we've got a cash flow statement coming up, which will give a little bit more flavour to that. But despite the Ebitda losses, we're able to maintain our cash.
And then some of the operational underpinnings of that performance, our products are doing incredibly well and are incredibly strong products. So in the UK, we enjoy first and second place in its mattress ranking, which sounds strange, but which is probably the best sort of objective assessment of consumer rankings of products. We've actually got 4 out of the top 7, I was counting, of Which's mattresses. And similarly in France, we enjoy number 1 position in Choisir, which is the French equivalent of Which. So the products are very high performing. We go out to all of our customers and we ask them after they've had our products for a period of time, 100 days with mattresses, slightly shorter with other products, as to whether they're sleeping better. Our kind of entire aim as a business is to help people sleep better, and we know that if you help people sleep better, they'll tell other people, and then you get some lovely organic sales growth through word of mouth. And 8 out of 10 of our customers tell us that they are sleeping better after they've bought their new Eve products. It's a really strong marketing message of that, so we use that in TV advertising, and it's very effective. That TV advertising and indeed the rest of the marketing activity do resulted in a 200 basis point increase in what we describe as unprompted brand awareness in the UK. This is numbers from August. That literally means we ask people name a mattress brand, and we see how often they say Eve in their answers. That's a really strong performance. The entire market increased its awareness, so everyone was more interested in mattresses and homewares. So that is a strong performance, and it's in line with the market. But given the reduction in marketing spend, we're very pleased with that because we had anticipated that might go backwards. And all in all, the overall conversion rate on our website, so when people come to the website, the likelihood that they will then go on to buy something, the rate at which they buy, increased by 60 basis points. And that's a really material difference. And I'll talk to it at the end of the presentation. But it's that gives us the confidence to continue to invest and grow and feel good about our future, really. So our income statement for the year, repeating some of the what I said in the previous slide. So revenue was up 6%, as I said. Worth calling out here the improvement in our gross profit margin. So quite a significant increase there, up from 53% in 2019 to just over 57%. It's driven by a number of factors. It's driven by working on our pricing, working on our cost prices with our manufacturers, and it's also driven by our sales mix and our channel mix. So sales mix in terms of what we're selling. So we have been quite successful in 2020 in selling more of our premium price products. So our premium mattresses and bed frames sit in the sort of top sellers of our ranges. And in terms of channel mix, so we sell direct to consumers. We also have a number of retail partnerships. We are focused with those retail partnerships on making sure that they work for us as well as for the retailer. One of them we exited last year, which the first half of the year would have flattered our revenue, but not done much for our margins, and potentially not even generated anything at all. So we exited that to focus on the more profitable sales channels. And the growth in our revenue, as I mentioned, was really driven by the direct-to-consumer last year, which has a better gross profit margin. Marketing contribution there, you'll see, so
positive, quite nicely positive, 4.3 million, up from a 2.5 million loss the previous year. So substantial swing there, driven by the improvement in margin and the reduction in the marketing costs. And that gets us to our stated EBITDA loss of 2 million. Do you want to talk about this one?
Yeah, I can probably I think we wanted just to show the difference in the two markets and the growth in the two markets over 2020. So you can see very much the growth we enjoyed in the UK. We continued to invest in the UK in 2020, so that marketing cut was not as deep in the UK as it had been in France, and you can really see the impact of that on the growth UK versus France. But most importantly, you can see the change in contribution across both markets, the marketing contribution. Going forwards, we'll continue to invest steadily in the UK, so anticipate to continue with some steady and sustained growth. But the French numbers, which have been in decline, we look to turn around in the year ahead in 2020, which will mean that contribution will be lowered because we will overinvest to grow the market, which is unlikely to pay back in the first year.
This is probably the least exciting slide in the whole deck, so I won't spend too much time talking about it, but this is our reconciliation from our loss for the year of 2 million down to explaining the closing cash position of 8.4. The two things I'll draw out here, one is our decrease in inventories. We reduced our stock holding in the group between UK and France by £1 million in total, which is a significant, it's about halving of our stock. So that generated quite significant cash saving, and we made some improvements in our general working capital. So those two things combined meant that we compensated for sort of the cash loss in the business to close with a flat cash position across the year.
So where now and where next? This is a little reminder of our business strategy. So we are, we're now a 6-year-old business. I was going to say a 5-year-old business, we're now a 6-year-old business, 2021. We started in 2015 very much as a single mattress company, looking to sell as many about one sublimely comfortable mattress as we could. And we enjoyed success there while we had no competition in the UK market, but fairly rapidly competition turned up. We then sought to diversify the business, so strengthening the brand and allowing us to sell more products, so that we could simply grow in the face of a sort of fierce competition in each one of our SKUs. And that was where we began to really build out the sleep wellness proposition that took us from being one mattress to a range of mattresses and also on into bed frames and bedding. We spent most of 2019 sort of getting that shipshape and getting that right. And then we moved into 2020 where we were really able to step on building a business which was fit for future growth. We continue to build the brand. The brand is now holding a premium positioning, and we're able to sell premium products, more so than our lower price products. Actually, the vast majority of our business goes through our premium ranges. The wider sleep wellness, or the strength of the sleep wellness positioning, allows us to enter wider sleep wellness categories. And you've seen this year we've launched gifting ranges. We have a fairly diverse range of categories on the website, and it also allows us to deliver sleep wellness content, so across the digital infrastructure, which then generates more website traffic on a kind of bigger customer promise. The big focus for us is about customer experience. We are very firm believers that the future success of e-commerce businesses will be dependent on the quality of their customer experience. It is the new battleground. It used to be how good is your stores, and now it's how good is your customer experience. We have, we believe, market-leading customer experience. I think most of our competitors, you'd struggle to find a phone line, and if you're trying to choose your mattresses, they certainly couldn't help you. We think this is vital as more and more people come to e-commerce who perhaps wouldn't have chosen to shop e-commerce. People who would prefer to go to a store really do want to talk to someone and understand the product they're buying. And they want real confidence that if they need to return that product, it'll be easy and seamless and we won't create problems. And we work very hard to make sure that a return experience with Eve is as good as a buying experience. Our beds won't be right for everyone. That's the nature of life. All of that's underpinned by a lot of investment in stability. So scaling a business requires an increasingly stable base. Otherwise, as you grow, your business becomes fragile and you start to make mistakes, and that can be fatal, actually. So a lot of our time last year, this year, and indeed into next year is spent really creating a very strong infrastructure for scale across website, across manufacturing, distribution, logistics. And then all that is kind of flywheeled, if you like, or accelerated by what is now a fairly efficient or very efficient marketing machine. We know how to make our marketing work, and it's a repeatable model, and increasingly efficient operational machine. And again, we are in a position to be able to roll out that efficiency.
So I hope you can see the small print there, but this is a bit of a reminder of where we've come from in our finances, if you like. So back in 2016, we were primarily UK only. Revenues were just over £10 million there, and we lost just over 10 million. 2017, we started to expand internationally, and you can see there we've got core revenue and other. So the other is all of the international territories. The other is about 5 million. Total revenue for the business was just over 20. Losses deepened in 2017. 2018, similar international revenues. I think it was at the back end of 2018 that we then decided to exit most of those territories because they weren't proving profitable. Total revenues just under 30 million, but losses deepened to 20. So 2019 was the first year of our reset strategy. We withdrew from the non-core markets, so we retained UK, Ireland and France, and lower revenues in 2019, but also started to bring in the losses down to about 11 million there. And then for last year, solely focused on UK, Ireland, France. As we've talked about, small growth, 6% increase in our revenue, positive marketing contribution for the first time, and losses, you can see there's a much thinner black line at the bottom there, about £2 million Ebitda losses.
So just to headline the rebuild strategy, I'm assuming those of you who have been on the Eve journey probably know a little bit of this, but there were sort of three core pieces to the rebuild strategy that were laid down. So a differentiated brand proposition, which I've talked a little bit about, an expanded product range, and the lower friction customer experience, all underpinned with operational excellence. I'm just going to headline where we are on the rebuild strategy before we go on to what next.
The next slide.
Yeah. So a strong brand. We have completely overhauled our creative and media strategy. I'm hoping a few of you may have seen our advert with our dancing sloth in the UK. We're in the process of creating our French campaign as well as we speak. And that's resulted in an ever-increasing brand awareness, but also strength in our overall efficiency of investment. So we have more and more natural and organic traffic to the website, and we have to pay less and less often for customers to come and buy from Eve. That continued investment in growing the brand is what's then facilitated us being able to open some new sales channels and some new categories. So when we came to look at doing, for example, the gifting range in boots, it's because we had a strong brand that Boots were interested in, which they knew would add to their brand. That they had that conversation with us. Similarly, in France, we have a relationship with a partner called Olivier Desforges. It's a very relatively high-end department store for bedding. And again, they said to us, look, your brand is a strong brand, it's a premium brand, it's the right brand. We will talk to you, and they were not interested in talking to partners. So creating a strong brand is about marketing efficiency, but also about opening up new channels and new products. Our range. So, sometimes people ask, why Eve? And fundamentally, one of the simple answers is because we've got the best products. So we aim to be accessible, premium at all times, and deliver excellent value for money, and we really do. So we have, as I said, the top 2 mattresses in the UK are with Eve. If you look at most Best Buy lists, you'll find our pillows there, our duvets there. We have a carefully curated range of very high quality products, all of which are very, very distinctly designed to improve your sleep. So they're not there for their kind of colours, they're not there for their fancy twiddly bits. They're all carefully designed and crafted to improve sleep. At the core of this business is the understanding that sleep and better sleep is a customer need, which is growing, which is commercial, and which we're trying to tackle. That sort of broadening and deepening the range has seen a number of successful launches over the past 6 months, with a few more still to come, not least of which was our initial foray into gifting with Boots. And then our customer experience. So, this is a lot of unseen engineering, but we have done a vast amount of work. We've moved warehouses, We've changed supplier partners. We've launched new delivery services. We've recruited an awful lot of customer service and trained customer service personnel, all to continuously improve the customer experience. Our trust balance scores are something we are very proud of, and I think if you look at us compared to one of our competitors, Emma, or alternative competitors such as Dreams or Benson's for Beds, you'll very much see the difference in what we're trying to create. We are very clear that good customer experience and good customer service creates good word of mouth. Strong businesses are built from people who have good experiences. And then underneath that is making sure that is not just a great experience, but it is scalable. So delivering a great experience is easy if you just have lots and lots of people or money. We are trying to create an experience which is efficient and scalable. So there's a lot of investment going into tech, actually, both front end, so e-commerce, and back end, so supporting our logistics to make sure that what we are building is scalable and consistent across markets and as we grow. And all of that is underpinned with some real operational excellence. I mean, Tim, do you want to talk a little bit about overheads?
Yeah, so we have, as you can see there, over the period of 2 years, from 2018 to 2020, we've almost halved our overheads. Two big changes were made there. So we've adjusted our headcount. So that happened, I think, at the end of 2018 and again at the end of 2019. So at the end of 2019, we reduced our business headcount by about 20 people. And we were able to do that in two areas. One is that we change in emphasis and focus in the marketing investment in the year, but also on our technology platform. So moving from a very high cost of ownership bespoke web platform to a Shopify platform has enabled us to free up resource in that area. And having fewer people meant that we needed a smaller office. I mean, arguably over last year we could have got away with no office, but we have an office. It's a lot more cost effective than the previous one. So those two things, really, the people and the space that those people need, has enabled us to halve our overheads over the period of 2 years.
But alongside that, what's key is that you don't then undermine the quality of service. So we've done a lot of work with our warehouse and indeed consolidating our shipping. So we've got to a point now where customers, when they order 3 things from us, get 1 delivery. That sounds like a minor achievement, but goodness me, it's not as easy as you think when you try and deliver a pillow and a bed frame and a mattress all on different lead times. That's fantastic for customers, better customer experience, and it's also better cost for us in the long term. Initially, there's been some investment in 2020. In the long term, that will reduce cost for us, 1 delivery rather than 3 years cheaper. And then we've also reviewed and consolidated our entire supplier base, partly Brexit, so to ensure that we were not affected too much by Brexit. I mean, there's obviously always ins and outs, but also to make sure that we had the right partners at the right cost levels who could also work with us to grow the brand forwards. So for the future, there's 3 pillars to everything we do in the business, and these they're intentionally pull against each other. So we are trying to grow the business, and we talk about growth, and we have a number of strategic activities to drive growth. We talk about customer obsession. Delivering a fantastic customer service and a customer experience that is best in class is core to the business. And we talk about business resilience. So that is a sustainable, profitable, highly engaged business with a low overheads as a percentage of revenue. Those 3 things can pull against each other. So keeping a balance between growth, customer experience, and our cost and our engagement is a core part of the business strategy. We have a number of projects across the business, which we call blue chip projects, and each of them sits in one of these 3 areas, and we very carefully balance resource and investment across them. And broadly, they are to deliver on these kind of 4 plans, a plan that delivers on these 4 areas. So first is to sustain the UK growth that we have been able to get to. This is to really sort of leverage the momentum we've seen in e-commerce over the past couple of years, but also the hard work that's happened getting to brilliant products, to a strong brand, and increasingly good marketing data, which allows us to drive consistent growth without having to ever accelerate marketing as a percentage of overheads of revenue. We'll be accelerating France, and that is an increase in marketing as a percentage of revenue. So France, we have consciously underinvested in over the past year, whilst we get our house in order in the UK. We are now in a position to accelerate France, having gone through an awful lot of rebuild work over there. And as I said, at the moment, we are currently developing an advertising campaign, which we'll be launching relatively soon. Is all very exciting. France as a market is behind the UK in its transition to e-commerce, and it has not had the same pandemic effect. So there is more sort of immediate and short-term shift still to go in France, and we are firmly at the forefront of that. But we also have a more diversified business there than we did before, because we are present both online in our own D2C and offline in Ebitda Losses. So there's a great opportunity to grow in France than there was a couple of years ago. We'll enter some new markets. These are small satellite markets. So this is as we have built the capability with Shopify to be able to enter new markets in a low risk, low resource way. We'd like to start to exercise that capability. This is not massive. We're not about to, launch into, huge new markets. This is about markets we can service from our existing business. It's markets like Ireland. It's markets like Benelux. And then underpinning all that is further building operations for scale. With a business, you have to kind of build capability and then grow off that capability until you've maximized your growth without damaging your business, and then you build again. So we're in this build and then grow. We're still very much in a build space at the moment. There's an awful lot of back-end infrastructure still to go to really allow us to accelerate. So current trading, first 2 months of the year, we've grown year on year by 16% of revenue. It's been a good, strong start, in line with plan. So that's very planned, it's always nice to be in line with plan and for the plan to be a positive one. It will be a complicated year this year. It's very hard to properly forecast. I mean, I think we see it as a year of two halves. I think the first half in the UK should continue to be strong, but we anticipate the second half, the UK softening somewhat. We feel that a lot of what we are seeing and have seen over the past year and a half is as much a pull forward of demand for beds and bedding as it is an increase. Fundamentally, the market is a fairly fixed size. So we are anticipating that will soften a little bit as people go back to spending on holidays and clothes and the things that people want to spend on. On the flip side, France will have a quiet first half. We have not invested in France for some time. We don't plan to start investment for a little bit whilst we continue to build assets. So that market is to some extent still on ice. The second half for France will be much stronger. And as we said, France has not had the same pandemic effect. The shops have largely stayed open in France. So France should be a more normal response to investment. Ongoing product development continues across all markets. So we use a variety of models. We have some stuff that we develop in-house and with our manufacturing partners. We have some products that we develop in collaboration, and we have some products that we work under license. We will continue to do that. Where a product is either requires very unusual capability or is very high risk for us, and we couldn't divert the resource to it because it's a bit of a gamble, we will tend to do it under license. That's where you saw the gifting range. It's where we are exploring things like CBD oil. Where a product is more core to our capability, we will do it in-house. We have a lot more confidence in the risk analysis of investing in that product. All of that will be funded from our existing balance sheet, so we have no intention of looking for any more funding, over the 21-22 period. And we are thoroughly confident in our future. We are looking to reach sustainable profitability towards the end of 2022.
Sharon and Tim, thank you very much indeed for your presentation. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated in the top right-hand corner of your screen. But just while the company takes a few moments to review the investor questions submitted already, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is very important to the company, and immediately after today's presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Sharon and Tim, we've received a number of pre-submitted questions from investors, and I wanted to start, if I may, with the Q&A session with those, the first of which is in two parts. It reads as follows. Dear Cheryl, I love the mission of being the leader in sleep wellness over just being a mattress company. That's a lot more exciting. Can you please help us understand your product strategy on the type of products to be expected in 2021? And the second part is also, as part of the expansion strategy, have you considered any other European country for this year, or just focus on the UK and France?
I can certainly take that, Lloyd. So product strategy and expansion 2021. It's a little as I spoke to. So we have products that sit in the core beds and bedding, and we are always looking at how you might broaden beds and bedding. So clearly we have great products that deliver for, your everyday sleep in a bedroom, whether it's double beds and mattresses, duvets and pillows. We will be looking at, what are the in-home sleep, what are the in-home sleeping needs, and they will be coming down the line. So watch this space for what that looks like. I'm loath to give away too much, but that's the sort of core things. And then above and beyond that, we will take some of the learnings from the work we've done already with gifting and with sleep accessories, and a number of those products will become core to our range and go above and beyond temporary sort of gifting partnerships. Although we will be in conversation with a number of our retail partners, Boots included, about what Christmas 2021 looks like. And actually, surprisingly, that conversation comes sooner than you think, to further expand in gifting. In terms of markets, as I said, we have no intention to go markedly further than France and key satellite markets that can be serviced from either France or the UK for the moment. And the product development work we're doing will apply then to those markets as well. Every market is slightly different, so it isn't a cut and paste, but where possible, we have universal products across markets.
Thank you very much. The next question is, do the company have plans to invest in R&D?
I mean, we have an in-house development team, so that's an investment, and we work with a range of consultants and partners to develop our products. I mean, we wouldn't have any intention of building in-house manufacturing capability, so we aren't planning to change that model.
Okay, great, thank you. Next question is, what is the current situation regarding the previously reported pressures on raw materials and component pricing, as well as supply chain issues?
Yeah, I'll talk to that. So it has been a very difficult year. I suspect I'm not the only person to say that, to deal with, and we are in the hands of a global upset. So if we go back to the back end of last year, we had an awful lot going on with the global pandemic, which had disrupted logistics globally, which meant you couldn't get products in or out of ports. There was a trade war going on between US and China, which meant the US had started buying all of its springs from Europe. That was putting pressure on European prices. And then we had complete oil price shocks left, right, and centre as people stopped, buying jet fuel and stopped driving their cars. So the whole market was kind of turned on its head. I think the market has settled down a lot. A lot of the factors have settled. So, international shipping is easier, although still significantly more expensive than it was. I mean, significantly more expensive. Obviously, the American situation seems to have calmed down. So America is back to sourcing in a more normal way. But we are still very much feeling the effects of the global pandemic. So the impact of production of jet fuel, for example, has a material impact on the key chemicals that are needed to make the foam in mattresses. So our current situation, input pricing, input costs are still inflationary, which we're handling on a case-by-case basis. We are pretty confident in our overall supply chain, although there are unexpected fluctuations every now and then. And it is worth remembering that whilst the UK may be halfway through its vaccination programme, Europe is not. And a lot of our suppliers and sub-suppliers sit in Europe, and they have factories that are being taken out by COVID regularly. So at any point in time, we have, unexpected problems turning up that we are dealing with. So I'd expect disrupted supply and inflationary pressures for some time. It's a little bit difficult to know where and when, and we have lots of mitigant plans in place.
Thank you very much indeed for that. Sharon and Tim, investors have submitted a number of questions during the presentation today, and I wanted to hand back to you to respond to those where you feel it's appropriate for you to do so. Could I ask that you please read out each question and say who it's from? Thank you.
I'll start. So first question is from Mark W. Any intentions for further capital raises? No. Anyway, so our house broker FinCap have put out their research notes, and they've put out a forecast for this year. We are going to invest more in marketing this year, as we talked about. In FinCap's view, we will eat into the existing cash that we have this year, but we are certainly of the view that we have sufficient cash to get us to profitability. We have internal plans, of course, but we're not at the moment trying to predict when that might be, when we get to that profitable position. But absolutely, we have sufficient cash to get there, and there are no immediate plans for any capital raises. We would only do that in the foreseeable future if some amazing new opportunity came along that was sort of too good to turn down and we needed to raise cash for it. So no plans, and we don't feel there are any needs.
Scroll down a tiny bit. The next question, also from Mark W, is: can we elaborate on any scientific evidence that suggests your beds improve sleep patterns? We don't work that way. So what will improve your sleep pattern is not what will improve your wife's sleep pattern. Everyone is very individual. What's important to us is that the products we produce are best in class and work for as many people as they possibly can. So as I've spoken to, our matches are best in class as tested by Which. What's more important is that if our products aren't right and you aren't sleeping better, you can send them back really easily. Sleep is highly individual. It's a bit like clothes, it's a bit like food. You may love blue cheese and your friend does not. So we would never go out and say scientifically our bed can improve your sleep. And by the way, anyone that says that is lying. Tim, what level of organic revenue would you deem satisfactory? I think this is probably the broker's view, isn't it?
What level of organic revenue growth would we deem as satisfactory? It's impossible to say, actually. I mean, we don't have a crystal ball. As we've sort of talked about in the presentation already, we think this will be a year of two halves. Given the UK hopefully coming out of lockdown restrictions towards the end of the first half of the year, UK consumers being able to start spending money on retail and on hospitality and leisure. We don't know what they're going to continue to spend on retail and e-commerce. So it's very difficult to say. The situation in France is slightly different. They've not been in lockdown in the same way that the UK has. As FinCap have put out in their forecast, we are expecting revenue growth this year, more so in France, because we didn't. UK obviously saw a lot of revenue growth last year, particularly in the direct-to-consumer model. So as we get into that sort of comparable period, we're not expecting to see a big uplift against last year. Growth in France, we said we're investing in marketing there. So definitely, as FinCap's I think the figure they put out is 27 million for this year, so that's 2 million uplift on 2020. Next year, we're not predicting that far forward yet.
We will come back with that in a few more months when we can see how the year is panning out. So Charles F has asked, in the light of last year's experience, will you be repeating / expanding your gifting range with Boots and others? We hope so. Obviously, it's time to turn to Boots. Boots were very happy with the performance of the gifting range. And yes, we will be talking to our other retail partners about our successful sort of first steps into what is in essence fast-moving consumer goods, which is a category and background I'm fairly well versed in. So I'm quite excited about where that might take us.
Next one from Paul S. Inventories were extremely low at the 31st of December 2020. Did you get a big delivery of product in early 21, and what would normal level of inventories be? So we consciously reduced inventories throughout 2020. At the end of 2019, we felt they were too high, both in UK and in France. We had been working, particularly in the UK, we've been working with a warehousing business that were probably not quite the right fit for us. We moved to somewhere that was more, I think it's fair to say, professionally run, that had better control and visibility of the stock they were holding on our behalf. So we were able to, with them, manage with a lower level of inventory. So we worked hard to on our stock planning so that we would have the right level of stock at different points in the year, and worked hard on reducing what we call our slow-moving stock, so anything that had been sitting in the warehouse for too long. So we didn't get a big delivery of product in early 2021, but it is a very live conversation at the moment about what should our normal levels of inventory be. So in the UK, we operate primarily a drop ship model. So our mattresses are shipped direct from the manufacturer to customers in the main. So we don't need to hold a big stock of mattresses in our own warehouse. We have recognised that, and we've been sort of experimenting with this, I suppose, over the last few weeks at measuring the impact of having on our conversion rate of having items in stock for immediate delivery. We might have assumed in the past that as long as we could deliver within 2 weeks, then that was okay. But so we're experimenting with that and seeing what the impact is on our conversion rate. So we don't expect our inventories to shoot back up to where they were at the end of 2019. It's likely they will go up a bit from where they were at the end of 2020.
So, unusual names. At Eve, customer sleep wellness score. Why survey only mattress customers when other products are also sleep wellness products? So we will survey all customers. It's just been a pure technical glitch about getting our email systems working properly. But either we are now or we are just about to be surveying all customers. That's that question. And then, second question was, following the end of the Channel 4's 0.9 million advertising spend reinvestment, i.e. paid in shares, can marketing efficiency be maintained and improved? The marketing efficiency number you're seeing is irrespective of how that is funded. So so the efficiency will be maintained. The funding, whether the funding comes from cash or shares, is irrelevant to what you're seeing in the P&L. I'm right in saying that.
Yeah, exactly. And the marketing cost, and therefore the efficiency that we report on our P&L, has that Channel 4 spend at the invoiced price, and it's invoiced at market rate. So the difference being that we've paid for it in shares instead of in cash, but on the P&L, the full cost of that is represented.
Will has asked, what effect on web conversion is anticipated from the move to Shopify? Very little. So the intention in moving to Shopify is not about improving web conversion. It's about improving stability, overall stability of the platform, and our ability to expand without having to expand management and overheads of the platform. So, I mean, little. I mean, and the move happened in the UK in September, happened in France in January. Conversion rates have remained strong, very little difference. And then, why bother with new product initially trialed through a license model if there is limited financial upside? So the role of the license, so it's quite a good question. It's a very good question. All these questions are very good questions. We have some different strategies. So the reason that we work on for example, the sleep gifting range, and indeed we're exploring CBD, is not to drive a significant revenue upside. It's to find a way to get brand presence, if you like, marketing, for very low cost. So if you think about the fact that the Sleep Wellness range was in 450 Boots stores over Christmas, if you were to convert that presence into media cost, I mean, I wouldn't like to do the math, but it's probably somewhere, probably about £500,000 of the media cost, if not more. And instead, we've received that presence and actually received an income from it. So number one priority is about creating awareness for the brand, similar with the CBD oil. We'll move it, if we do that, go ahead with that license, and that's currently very much in plan. It's as much about getting PR and awareness for the brand as it is making revenue and getting that PR and awareness at little to no cost. If these things are then successful, so the other massive benefit is you get to test. So we launched, from memory, 9 products with Boots. It's highly unlikely you'll have 9 successful products in a launch. You might have 3 or 4 or 5 if perform well, and others that you need to iterate. In testing it in this way, we know which of those products we want to create in the long term permanently, and which of those products we want to put to one side, without having to go through all the in-house development and cost that goes with that. About 70% of innovation, generally, particularly FMCG innovation, fails. It's a very high failure rate on innovation. It's quite a risky thing to do. So finding a way to innovate and try things out without putting huge risks and opportunity costs in the business is really key. So it's just a very low risk way of exploring new markets that we perhaps don't have the in-house capability to access today. So Simon Sears asked, can you give some examples of how you look to expand your product offering? Is there a notable cost to marketing, and is there a risk that it dilutes what you are known and respected for? So this is a good question. So our product expansion, core product expansion that we do out of this building with our product development team, is all around our core promise of sleep wellness in the bedroom. What we are known for, what we are investing in being known for, is sleep wellness in the bedroom. So we're working very hard to become much more than a mattress business, and instead a place you can go for a curated range very high-performing sleep stuff that will kit out your bed and your bedroom to help you sleep better. It should not therefore dilute what we're known and respected for, but build what we're known and respected for, so we become much more than just a mattress brand and instead become a brand that's all about sleep wellness. Is there a notable cost to marketing? Not particularly. So the products we're expanding, because they are close to our core brand position, the communications we put out should be just as effective at selling a weighted blanket as they are at selling a duvet, as they are at selling a mattress, because the communication we're putting out is about sleep wellness. If we were putting communication out that talked about 3 layers of foam in a mattress, clearly that would not sell a weighted blanket. So the very reason we're building a sleep wellness brand and we're communicating on a sleep wellness positioning is to support a wider range of products.
Steve B has asked, could you please explain why distribution expenses as a percentage of revenue increased from 11.4, 11.6 in 18-19 to 13.9 in 2020, and whether you expect this to return to previous levels going forwards? So there's a couple of 2 or 3 reasons why the cost increased in 2020. I mentioned a few minutes ago that we moved warehouses in late 2019. As I said, it's a more professionally run warehouse. With that comes more cost. But during the course of the year, as we were reducing our stock levels, we were able to contract the amount of space in the warehouse that we were taking up. We weren't able to do that until Q4 because we were contractually tied into the space for the first 3 quarters. So from Q4, we got a real saving, a monthly saving in our warehousing costs, which sits within distribution expenses. So that we only benefit from in the last part of the year, but then comes in for the full year in 2020 for the UK warehouse. There were some sort of structural shifts in driving the cost. So we've talked about the products that we've been selling and the shift in some cases to more premium products. The more premium products are typically heavier, and the heavier something is, the more it costs to deliver. So that's definitely had an increase, forced an increase in some of our distribution costs. The weighting between our direct consumer and our retail sales also has an impact. So for some of our retail partners, we deliver direct from our stock or from our warehouses to customers, but for others, we deliver in bulk to the retailer. And so the percentage cost of delivering in bulk is very low. But as the mix shifts towards the direct consumer, our distribution costs will increase. Also in the UK, in the final quarter, Chara mentioned we moved from delivering our items individually with different carriers. So if you in the past had ordered a mattress and a pillow and a set of bed linen, you would have received either 2 or 3 different deliveries. So that's more expensive than consolidating, which we're now able to do. So if a customer ordered that same mix of products, it would come as a single delivery, and that's cheaper than delivering 3 things. We've got more to do on the French business. So France is subscale, and as we grow that, we'll benefit from some economies of scale. We'll also, in France, move to the consolidated delivery model, which will give us some savings. Will it go back to 11.4? Not sure at the moment, but definitely it's something that we continually looking at and looking for more cost-effective ways of doing things, but in a way that still gives the customer a great experience.
Yeah, how big is the real addressable market? Can you give us an idea of the competition in the market and what you feel is the main reason to go with Eat Sleep from Nick J? I mean, the addressable market is better sleep, and very consciously better sleep. So it's a very hard market to define. I mean, lots of studies say it's a multiple billion market, and I wouldn't even want to go there. I think the most important difference is that Eve is not a bedding retailer or a mattress retailer. Eve Sleep is a curated place for brilliant sleep products. So the reason to come to Eve is because you want to sleep better. We've done a lot of work. We know exactly what portion of the UK population, and we haven't quite done the work in France, are looking to spend more on products to improve their sleep. It's around 25%, and that is our absolute core market. And what we have promised and what we offer at Eve is that you will arrive at Eve, you will get best-in-class products, best quality products at a good price, carefully curated and carefully designed to tackle the problems of sleep wellness. So whether it's our temperature balancing protector, which is getting rave reviews and selling like hotcakes, which simply makes sure that you are sleeping at the right temperature. One of the big problems in sleep is being the wrong temperature. Our weighted blanket, which helps calm people before they go to sleep and really helps with anxiety, and anxiety is a big problem for sleep. Or simply our premium hybrid mattress, which is, by all accounts, the best mattress you can buy, which makes sure you've got comfortable sleep. These are examples of the way we design our products to make sure that everything we do is there to help you sleep better. It's not there to just look pretty or have whizzy bells and whistles. So main reason to go to Eve Sleep is because we are fundamentally the only sleep wellness business that we think exists.
Leon B has asked about our cash flow. Company generated positive free cash flow in the period. Is this trend likely to be sustained in the current financial year despite the unwinding of positive COVID support? I think we've talked about that. I think we've answered that, and the answer is no. We made some one-off improvements in 2020. We can only reduce our stock by £1 million once. We can only make the working capital improvements once. We can, of course, continue to look at small tweaks and small improvements and small marginal gains there. But as we've talked about, the FinCap, the broker forecasts for this year, will be to eat into our cash, so there will be an Ebitda loss as we continue to go for expansion and continue to invest particularly in France. So we expect to spend more cash this year, but also, as I said at the beginning of the questions, is that we are very confident that we have enough cash in the business to see us through to profitability. On to the next one. William would like to know what yearly revenue has to be achieved so the company can declare a profit. It depends. We could generate a profit now if we turned off our marketing taps, if we perhaps had a relook at some of our headcount, if we were more aggressive on our pricing and discounting. There's lots of things that we could do right now to generate a profit in the short term, but it wouldn't give us the growth. It would just probably put the brakes on us growing and potentially see the business contracting in size. So our goal is to achieve enough scale so that we can and build the infrastructure to support that, so that we can get to a sustainable and repeatable level of profit. And then grow the business beyond that.
So Steve M has asked, can you give us some information on the partnership with Sun and Lifestyle with regard to the CBD oils being added to the product portfolio? So yes, this is a licensed relationship in the same way as, it's a licensed relationship. So very simply, Sana are a producer of CBD oils. They're a European producer. They produce under a number of different categories of CBD benefits. They came to us saying we would like to produce a sleep benefit CBD. And back to the point, you are the only sleep wellness brand that we know. We'd love to work with you guys. It's a very simple relationship. So they design and create the product with their extensive R&D, and CBD is not an easy category. It's very, very heavily regulated. We work with them on packaging. They use our brand name. We work together on selling into retailers, and we will host it on our own website. And then we take a small percentage of sales as a license fee, and they take the bulk of sales. It could be it could be big, it could be small, we don't know. Fundamentally, we're taking it on a license basis, so it is unlikely ever to be a huge amount of revenue in the business, but equally, it could be a very interesting category for us to enter, and we are keen to be in that category as a core category for future growth, I think, for sleep.
Roger has asked, are we manufacturing in France for Ebitda or shipping from the UK? And are we manufacturing in the UK or importing? So The vast majority of the mattresses that we sell in France are manufactured in Belgium, and the vast majority of mattresses that we sell in the UK are manufactured in the UK. We have a small number of products that we import into the UK, so there's a few items that will be imported from mainland Europe and from the Far East, but mattresses being our biggest category, they're all produced in the UK for the UK and the Irish market.
Okay, so Martin G has asked, a few of the key products have been sold out for extended periods of time relatively often. I appreciate this is likely due to the new operational strategy which targets a reduction in warehousing expenses. But from the outside, it seems that this is a bit overdone with an inventory of circa 600k for FY20. Can you comment on that? I think Tim's already spoken to the inventory situation. I think it's also really important to note that the pandemic and the supply chain fluctuations have been a real headache. We source product from, if you think about our bed frames, we've got 3 or 4 bed frame manufacturers, we have, pillows and duvets and our sub-supply chain. And a lot of the challenges have been a combination of the sub-supply chain being knocked out by COVID, literally factories closing because people are off looking after children because they've had a lockdown. I mean, in Portugal, the factories tend to have females as the workers, and those same females are looking after children who aren't at school. So, we are on the receiving end of a global pandemic. Combined with some of the logistics challenges that have also been hitting people with getting things in through ports. We've had stuff stuck in all sorts of strange places as we struggled to get it to where it should be. So as much fluctuations in supply chain as inventory, and we've spoken to inventory. SEO on eSleep's website is poor. Is that something that will change? I mean, that's a very broad statement. I think there's areas we focus and there's areas we don't. Our SEO performance is very strong, and our SEO traffic is in material growth year on year. So we're quite happy with the SEO performance at the moment. CBD is fantastic. When's the launch? Not quite sure. Certainly in the next 6 months.
Michael T, what's the initial investment to open a new market? We're exploring that at the moment. So it's as Cheryl talked about, the new markets that we will expand to are kind of ancillary to where we exist today. So we are not about to invest huge sums of money in opening those new markets. We will only do it if it is a cost-effective and a relatively inexpensive thing to do. It will be light touch to start with, and then we'll see how it progresses.
Go from there. Alex G has asked, what are you looking to do to increase visibility versus Emma in 2021 beyond TV ads? And what is the reason for the lack of social media output? So, I mean, it's a nice spot, Alex. Well done. Emma, their marketing spend is between 8 and 10 times our marketing spend. And if anyone's doing the maths on even if you took our marketing spend and multiplied it by 8 to 10, you can see exactly how profitable we would be as a business. So that's not our strategy. A lot of what you're seeing in things like the gifting, a lot of what you're seeing in things like relationships with CBD oil is to try and find ways to drive that visibility, as you say, versus Emma, without having to spend significant sums of money. We have very, very deep-pocketed competitors. I mean, you talk to Emma there. I mean, Dreams spend twice what Emma spend. IKEA spent, I think, 3 times our full year media spend in 1 month. We've got some big competitors from their spend, and we have to be very, very intelligent in the way we drive our marketing, which is what you can see with our diversification. The lack of social media output, we have a very active social media strategy. We work very hard to make sure that costs in, and we're very happy with how it's performing at the moment.
I think we've got about a minute left. There's a few questions, so we'll see what we can get through in the last 60 seconds. Connor's asked if we're looking to expand the business with corporate B2B clients or keeping the focus on retail B2C. Yes, I mean, we're always talking to new retail partners and constant conversations going on about new opportunities. So very much exploring that in the UK and in France. And hopefully in Ireland and other markets in due course.
Okay, well, 2021 profitable. Unlikely as per the FinCap broken note, I think is the question there.
Any prospective directors buying some more shares in the near future?
Tim?
I couldn't say right now. Yes, well,
I like my bank balance and show.
We've certainly done so in the past. What have we got left?
Are there any plans? So Mahmood has asked, are there any plans to revisit a merger with Simba or a merger with any other business to help you achieve your future growth plans? As we said at the moment, nothing like that is on the table. If an opportunity came along that we couldn't resist, we would look at it, but it is not in our near plans.
Sharon, Tim, excellent. Thank you very much indeed. Thanks again. I think you've addressed all those questions that you can from investors, and of course the company will review all the questions submitted by investors today and will publish those answered on the Investor Meet Company platform. Cheryl, perhaps I could ask you to wrap up with a few closing thoughts, after which I will redirect investors to give you feedback.
Yeah, a few closing thoughts from me. Look, it's an absolute delight to be able to speak to the investor community. I'm very aware we've not had this opportunity, so it's wonderful to be able to do so. And it's lovely to sit here as CEO and able to do this. We've had an incredible year. We've done it all from the corner of our bedrooms and strange little desks, and it's all credit to the commitment and the creativity of the team we have around us, all this amazing work. I mean, Tim and I are just sitting here taking a little bit of the glory.
Well, thank you both for updating investors today. Could I please ask investors not close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, then the feedback page will appear. But if you access the meeting via the link sent to you via an email, you'll be simply asked to log back in to submit your feedback. On behalf of the management team of EveSleep PLC, we would like to thank you for attending today's presentation. This now concludes today's session. Good afternoon to you all.